Hi, and welcome back to UncoverFraud.com. My name is David Malamed, and I am a forensic accountant and fraud investigation expert of about 20 years now. Today I want to speak to you about a huge problem that's happening, and I'm going to use a public company that just recently came up in the news, SAExploration Holdings, to tell you about it. But the big problem really is, before I get into SAE, is that audits are not forensic accounting and fraud investigation engagements. And that is something that has such an expectation gap out there that we really need to change it. So SAE is charged by the SEC, or the Securities and Exchange Commission, of committing a $100 million accounting fraud. The fraud is that the company was allegedly using routing payments through shell companies to legitimize revenue. But that's not all. The 4 prior executives from SAE actually reallocated more than $10 million of companies' funds for personal use. 2 of the former 4 executives, they even went one step further to involve their spouses in the fraud. It is alleged that former CEO and chairman Jeffrey Hastings, former CFO and general counsel Brent Whitley, former CEO and COO Brian Beattie, and former VP of operations Michael Scott recorded $140 million of sales to Alaskan Seismic Ventures, or ASV, a related company. ASV was supposedly an independent seismic data library who would identify speculative underground oil and gas deposits, and then they sold them the mining rights to oil and gas companies. Initially, the 4 executives, or ex-executives, had suggested that SAE create its own seismic data library business. However, the SAE board voted against the idea due to the perceived risk and capital exposure. Hastings and Whitley had created ASV in the name of one of Whitley's associates to make the company appear independent of them or SAE. For transparency and regulatory requirements, ASV should have been reported as a subsidiary of SAE. The other 2 executives, Beattie and Scott, are alleged to have either known or recklessly avoided identifying the independence issue. ASV independence from SAE also provided more Alaska tax credits than allowed had it been identified as a subsidiary of SAE. It's alleged that Whitley capitalized on weaknesses and deficiencies in SAE's internal accounting controls and personally approved payments to the shell company he created while acting as SAE's CFO and general counsel. Of the $10 million taken personally from SAE, $6 million was divided equally among the 4, and Hastings allegedly took another $4 million in an unrelated fraud. The SEC has vowed to pursue the wrongdoing vigorously. However, this is a public company fraud, and it's yet another example of an audit failing to identify a fraud. There is a difference between a financial statement audit and a forensic accounting and fraud investigation engagement. It is the audit gap, or the expectation gap, of an audit. Keep in mind, an audit only identifies 3% of frauds when a fraud is occurring and the company is being audited. Just to give you some perspective, over 50% of frauds are identified from a tip or from a whistleblower. Quite a distinction between the 2. Look, to find out really the big difference between the auditor and the forensic accountant, I'm not going to tell you again. Watch my video below marked the difference between an audit versus a forensic accountant. Again, my name is David Malamed, and I am a forensic accountant and fraud investigation expert. I bring up this issue once again regarding audits and what they do and what they don't do, and the comfort they should give investors and the comfort investors believe that they have. There is that gap. Look, please don't forget to subscribe and like below. I look forward to seeing you again. Take care, thank you, and God bless.